We anticipate a difficult environment for investors over the next few years. We are likely to remain in a very low nominal growth world, which means investment returns are expected to be lower than we may have experienced in the recent past. We've also grown used to very low volatility across asset classes, largely because of the super easy liquidity conditions and zero interest rates. We believe we have now seen the lows, and investors should be prepared for heightened market volatility going ahead. So in summary, we expect lower returns and higher volatility. In this environment, buying and holding a single asset class is unlikely to deliver consistent returns, and instead, investors should adopt a more tactical approach in managing their investment portfolios. An average investor may not have a deep understanding of the risk-reward profile of each asset class, nor the concept of portfolio construction. Instead, they are concerned with meeting their financial goals without having to take excessive risk. Target risk solutions aim to invest within the target risk parameters that are linked to individuals' risk tolerance. The portfolio manager will be responsible for finding investment opportunities within those risk parameters by a combination of tactical and strategic asset allocation. There are 4 funds, namely Capital Conservative, Managed Growth, Growth, and Growth Plus. Investors could match their risk tolerance level with the corresponding fund. For example, investors with shorter horizons and lower tolerance to volatility may want to consider the more conservative funds. At the other end of the spectrum, aggressive funds, which have higher weightings in stocks, may appeal to younger investors with longer horizons. Most investors here in Hong Kong have a diverse range of financial goals. However, despite ploughing their money into savings, Manulife's research has shown that Hong Kong investors generally still face an aggregate shortfall of 2.5% per annum in matching the growth rate of the costs of their 5 most cited financial goals, namely saving for retirement, for their children's education, for a home, to maintain their current lifestyle, or just saving for a rainy day. The key reason is that Hong Kong investors on average hold more than 45% of their financial assets in cash deposits, which yield insignificant returns and the value of which in reality will be eroded by even a small amount of inflation over time. To address this, we have introduced the Manulife Hong Kong series all-weather portfolio funds, a range of 4 target risk solutions that aim to take the complexity out of investing for investors' financial goals. They provide an all-in-one solution set to match individuals' risk tolerance. They skillfully blend tactical and strategic asset allocation that helps navigate through changing market conditions. They offer the potential to maximize risk-adjusted returns by diversifying investments globally. From an individual's perspective, a key benefit of the all-weather portfolio funds is a diversified exposure in terms of asset classes and markets, something which is both difficult and costly to achieve if individuals build portfolios themselves. We can also invest in ETFs, which makes portfolio management more efficient and which enables us to access other investment opportunities beyond actively managed funds. MultiAsset. The portfolios are actively managed between different asset classes, including equities, bonds and cash, across a broad range of countries and sectors. Multi-specialist. With more than 425 investment professionals located around the globe, the portfolios are able to tap on the expertise of a wide array of specialists. Multi-style. The portfolio also has the flexibility to choose from a variety of approaches to access an asset class, including direct investments, active funds and passive funds. So this approach benefits investors in 2 ways. The diversity across a wide range of assets and styles means that the portfolio will be relatively less vulnerable to wild swings in individual markets during adverse conditions. And also, the flexibility means that the portfolio is able to take advantage of opportunities around the world as and when they arise.